So we have a defense call that we're going to host tomorrow at 2 p.m. In general, the defense names have been much weaker than the industrial sector in general, about 20% behind the market year to date. I think some of that is the debt ceiling. So as we move past that, we get a little bit of an inflection there. We've seen some of these kind of more defensive parts of the sector be, I think, more resilient or hit a bit of an inflection. We've seen that in some of the EV metals, which we did last week. So I think this is probably one of those. When we did this deck last time, we didn't end up with a lot of new best ideas longs. You can look at the cycle and say, look, defense spending isn't so much driven by domestic policy. It's driven by external factors, the need to build systems that respond to a potential adversary, we're in basically a great power struggle. So what we do ends up being not so much a function of domestic politics, but more a function of, responding to capabilities abroad. So, we sort of like the long-term cycle, but a lot of the names weren't really positioned all that well. They were up, expensive. They weren't, sort of overbought, overpopular. But the reality is that within the industrial sector, defense names tend to be very good quad 4 performers, right? They tend to have good visibility on earnings, cash flow. They tend to not be as cyclically exposed. They're under a lot of long-term contracts, so they don't love a lot of inflation. So if you get some disinflation, it probably doesn't hurt.
I can only, sometimes this triggers people, but just get over it. It's just like when I say, I own a stock, and if the analyst doesn't cover it, I can own the stock. So for example, if you put Howmet HWM on there, I'd have to sell it, right? It's been a great long for me in my PA. I'm not going to pitch people on it. It's just a stock, okay? It's an exposure. But it's one of the few stocks, like when I run my defense basket, that wasn't breaking down ahead of this, debt ceiling debate. And look, the signal's really smart, right? I mean, it's artificial intelligence, right? I mean, it sees what the world can't see until it sees it. And what it saw there was the risk of defense spending cuts, not actual defense spending cuts, right? So you get things that are oversold, that are bullish from a long-term tail perspective, 3 years or less in duration, that have lost their immediate term trade and trend momentum. Those quite frequently are the ones to buy if you have an intermediate to longer term time horizon, because you get an event risk that goes away that wasn't actually true.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.